Imagine waking up, checking your phone, and seeing that while you were sleeping, an AI trading bot made more money than you did all week at work. That's exactly the dream these flashy ads sell you. My bot made $500 a day on autopilot. But is that even close to reality? And more importantly, can artificial intelligence actually beat human investors in the stock market in a way that is reliable, long-term, and realistic for normal people like you and me? Today we're going to unpack that, step by step. By the end, you'll know what AI trading bots really do, where they're strong, where they fail badly, and how you can use AI in your own investing without blowing up your account. First, let's get clear on what we mean by an AI trading bot. A trading bot is just software that makes buy or sell decisions based on a set of rules. In the old days, those rules were simple. If the price crosses above this line, buy. If it crosses below, sell. That's not really intelligent. Modern AI bots, in theory, go further. They might use machine learning to analyze millions of data points, price movements, volume, volatility, and maybe even news or social media sentiment. The idea is to let the algorithm find patterns that a human would never notice and trade on those patterns faster than any person can. Now compare that to a human investor. Humans can read the news, understand context, follow company earnings calls, and interpret things like politics, regulation, or new technologies in a way that's still very hard for AI. A human can say, "This CEO is clearly hiding something," or "This technology will change an entire industry within 10 years. That's intuition, experience, and real-world understanding. But humans also come with some big weaknesses: fear, greed, FOMO, revenge trades, and overconfidence. You probably know this feeling. You sell at the bottom because you're scared, or you buy at the top because everyone on social media is hyping it up. That's where the idea of an emotionless AI bot sounds very attractive. So how does an AI bot actually operate in practice? Imagine a system that constantly watches the market. Prices tick up and down, order books update, and news headlines roll in. The AI model, which has been trained on historical data, calculates probabilities. If this pattern appears, there's a 60% chance the price will rise in the next 15 minutes. When the probability crosses a certain threshold, the bot enters a trade. It often also has some kind of risk management, stop losses, position size limits, and maybe rules for when not to trade at all. It doesn't get tired, it doesn't get bored, and it can monitor dozens or hundreds of assets at once, every second. That sounds unbeatable, right? But here's the catch. Markets in the real world are not the same as the historical data the AI was trained on. When you train on past data, the model is very good at recognizing old patterns. The problem is markets constantly change. New regulations, new players, new technologies, and sudden geopolitical events, all of that can make yesterday's patterns useless tomorrow. A model that looks amazing in backtests can completely collapse in live trading. And most retail AI bots that are sold to individuals are heavily over-optimized to look great on a backtest chart, not in real life. Let's talk about the big question. Can AI beat human investors? The honest answer is sometimes yes, but not in the simple one bot that never loses way that the marketing suggests. Large hedge funds and quant firms use very advanced algorithms, sometimes including AI, to find tiny edges in the market. They might trade thousands of times a day, making fractions of a cent per trade. With massive capital and fantastic risk systems, they can outperform the average investor. But those systems are built by teams of PhDs, running on powerful infrastructure, with direct market access and extremely strict controls. That is a completely different world from a retail trader buying a $99 AI bot from some random website. For everyday investors, the question is less, can AI beat every human? And more, can AI help me make fewer stupid mistakes? And that's where it gets interesting. AI is very good at repetitive, data-heavy tasks that humans are bad at. For example, screening thousands of stocks for specific conditions, analyzing risk-reward ratios, or backtesting a strategy across 20 years of data in a few seconds. AI can help you stick to your rules because the bot doesn't get emotional when a trade goes against it. If you tell it, never risk more than 1% of my capital on a trade, it will never wake up one day and say, screw it, let's go all in. But there are big myths you need to avoid. Myth number 1, AI bots are guaranteed profit machines. Nothing in the market is guaranteed. If someone promises 20% per month, risk-free, that is a giant red flag. Myth number 2, you don't need to understand anything. Just plug it in and let it run. If you don't understand how a strategy makes money, you're the product, not the customer. You're basically handing your wallet to a black box. Myth number 3, the creator has a secret algorithm that works forever. Even the best strategies lose their edge over time. Markets adapt. If a pattern is too obvious and too many people trade it, the profit disappears. So, what can actually go wrong when you rely blindly on an AI trading bot? First, overfitting. The bot was optimized so much on historical data that it perfectly memorized the past but learned nothing general. In live markets, that kind of bot falls apart quickly. Second, hidden risks. Maybe the bot makes small profits most days but takes catastrophic losses on rare events. You might see 10 days of small wins, then one day wipes out the entire account. Third, infrastructure and liquidity. Your bot might try to trade an asset that isn't very liquid. The backtest assumes instant fills at ideal prices, but in reality, you get slippage, worse prices, or no execution at all. Fourth, black box behavior. If the bot suddenly doubles its position size at the worst possible moment, you won't understand why, because the logic is opaque. This doesn't mean you should ignore AI completely. It means you should change how you think about it. Instead of asking, "Can AI replace me?" ask, "How can AI assist me?" Here are a few realistic ways to use AI in your investing. Use AI tools to scan the market. Let the algorithm give you a short list of stocks or assets that meet your conditions. Then you review them manually. Use AI for backtesting. Test your idea on historical data so you understand how often it wins, how deep the drawdowns are, and what kind of streaks of losses to expect. Use AI as a discipline tool. Set up rules for your bot to enforce risk management, while you still make the higher-level decisions like which markets to trade and when to pause the system. And use AI for analysis support. Summarize earnings reports, news, and sentiment to save time, but don't stop using your own brain. If you're thinking about trying an AI trading bot right now, here's a simple checklist. 1. Understand the strategy in plain language. Is it trend following, mean reversion, arbitrage, or something else? If you can't explain it simply, you don't really know what it's doing. 2. Check the track record. Is there a verified third-party performance history, or just pretty equity curves in a PDF? 3. Test in demo, or with very small capital first. Assume that the first version will fail, and let it prove itself with real-time data before you trust it. 4. Know the worst-case scenario. How big could the drawdown be? How would you feel if your account dropped 30%? If that would destroy you emotionally or financially, the risk is too high. 5. Diversify. Never put all your money into one bot, one strategy, or even one asset class. If I had to start from zero and wanted to use AI in the market, here's what I would do. I would first learn the basics of trading or investing without automation. Trends, support and resistance, risk management, position sizing, and portfolio diversification. Then I'd pick one simple, rule-based strategy that I understand. Next, I'd use AI tools to help me backtest that strategy on historical data and to generate reports. Win rate, average profit per trade, and largest drawdown. After that, I would let an AI-driven bot execute only that one simple strategy for me, with strict risk limits and a small amount of capital. I'd monitor it like a pilot, not like a sleeping passenger. Check regularly if performance still matches expectations and if the market environment has changed. Over time, I might add or adjust strategies, but always in a way that I can explain to a beginner. So, can AI really beat the stock market? In isolated cases, yes. Some advanced systems at big firms do outperform, at least for a while. But for most people, the smarter question isn't, how do I find the magic AI bot that never loses? It's, how do I combine the strengths of AI, speed, discipline, and data crunching with the strengths of human judgment, context, intuition, and long-term thinking? The most powerful investor in the future is not a bot or a human alone. It's a human who knows how to use AI as a tool, not as a lottery ticket. If this helped clear up some of the hype around AI trading bots, let me know in the comments. Would you trust an AI with your money? Yes or no, and why? And if you want more videos that break down the truth behind finance and technology without the marketing BS, hit like, subscribe, and turn on the notification bell so you don't miss what's coming next.